Have you ever watched a stock or crypto start to move, jumped in thinking this is it, only to have it completely fizzle out? It's frustrating, right? Well, today we're going to talk about a tool designed to help you avoid exactly that. It's a way to look under the hood and measure the real power behind a market trend. Okay, so here's our roadmap for today. We're going to start with that one big question that every single trader faces. Then we'll meet our new best friend, a kind of speedometer for trends. We'll figure out how to read it, see how to actually put it to work, and then wrap up with the most important thing to remember. So let's get right into it. We've all been there, staring at a chart, seeing prices move, and you have to ask yourself, is this a genuine, powerful move I should be paying attention to, or is it just a bunch of random, meaningless noise that's going to trick me into a bad trade? I mean, really think about that. How do you tell the difference between a trend with real momentum and a fake out that's just designed to trap you? Because getting it wrong is, well, it's expensive. You either jump into a breakout that immediately fails, or you get totally chopped up in a market that's just drifting sideways. So what's the solution? Well, it comes from a legendary market technician named Wells Wilder. He developed this indicator called the Average Directional Index, or ADX for short. And the best way to think about it is as a speedometer for the market. So what is it exactly? Look, at its core, the ADX has one and only one job: to tell you how strong a trend is. That's it. It doesn't care if the price is going up or down. It just answers the question, is there any real power behind this move? And I really love this analogy. Your car's speedometer tells you how fast you're going, right? It doesn't tell you if you're driving north or south. The ADX does the exact same thing for a market trend. It measures the intensity, the velocity of the move. And this right here is probably the single most important thing to get straight about the ADX. It is non-directional. Let me say that again. It is non-directional. So a super high ADX reading could mean you're in a monster uptrend, or it could mean you're in a crashing downtrend. All it tells you is that the trend, whatever its direction, is incredibly strong. Now, the math behind the ADX can get a little complicated. But the good news is we don't have to worry about any of that. Our charting software does all the heavy lifting for us. Our job is way easier. We just have to learn how to read the meter, which runs on a simple scale from 0 to 100. And here are the key levels you need to know. If the ADX is hanging out down below 20, the market is basically asleep. It's just drifting sideways with no real direction. But when that line starts to cross above 25, that's your signal. That's the market telling you, hey, a real trend is kicking in. And the higher it goes above 25, the more powerful that trend is becoming. And it's not just about the number itself, it's also about which way the line is pointing. So if you see the ADX line itself rising, that means the trend is picking up steam. It's getting stronger. But if you see that line start to fall, that's an early warning sign that the trend is losing momentum. It might be running out of gas. Okay, so theory is one thing, right? But how do we actually use this information to make better decisions? That's what really counts. So let's walk through a couple of really simple but powerful ways you can put the ADX to work. All right, let's start with a classic scenario, the price breakout. This is when a stock has been stuck in a boring sideways range for a while, and then suddenly, bam, it breaks free. Now this moment is where fortunes are made and also lost. This is where ADX becomes your filter. So step one, you see the price breakout. Now before you do anything else, you've glanced down at your ADX. If you see the ADX also waking up, rising, and crossing that 25 line, that's your confirmation. That tells you there's real power behind this move. But if the price breaks out and the ADX is just sitting there flat and low, that's a massive red flag. It's screaming, warning, this could be a fake out. Now, just as important as knowing when to trade is knowing when not to trade. The ADX is fantastic at helping you spot those choppy, sideways markets where trend-following strategies just get chewed up and spit out. Yeah, this quote pretty much says it all. When the ADX is hanging out below 25, it's a clear, objective signal from the market that there's just no trend to follow right now. It's telling you to sit on your hands and wait for a better opportunity, which can save you a ton of money and frustration. Okay, let's bring this all home. We've seen what the ADX is, how to read it, and a couple of ways to use it. Now let's just quickly sum up its place in your toolkit, because it's important to understand both its strengths and its weaknesses.
Look, the ADX is absolutely brilliant at telling you how strong a trend is and helping you dodge those weak, fake moves. But it's not some magic crystal ball. It is a lagging indicator, which means it confirms a trend that's already underway. It doesn't predict the future. And of course, as we've hammered home, it tells you nothing about which direction the trend is headed.
And that brings us to the real bottom line. The ADX should almost never be used by itself. Think of it as a crucial member of a team. It's the confirmation guy. You should always pair it with something else, like looking at the price chart itself or using a moving average to tell you the direction. The ADX just confirms if that direction has any power. So I'll just leave you with this to chew on. Now that you know there's a tool that can act like a speedometer for the market, a way to see if a trend has real horsepower or if it's just sputtering, how does that change the way you think about the risks you're willing to take on your next trade?